Do you work from home, even part of the time, but avoid claiming the home office deduction because you are afraid of an audit? You are not alone. For years, freelancer and small business owners have skipped one of the most valuable deductions just because it sounded risky. But here's the truth. Under the big beautiful tax bill, the home office deduction has never been easier to understand, and for many, it's safer than ever to claim. The IRS didn't rewrite the home office rules in 2025, but the new law brought long-term clarity to small business deduction overall. The stabilities give you confidence to take deduction you are legally entitled to, including your home office without fear. Hi, I'm Mia. I'm a tax professional with over 15 years of experience helping entrepreneurs and self-employed professionals reduce taxes, stay compliant, and grow their business with confidence. A quick disclaimer, this video is for educational purpose only, not tax, legal, or financial advice. Please confirm your eligibility with a qualified professional before filing. Now, let's walk through how the home office deduction really worked in 2025. What didn't change under TOB3 and how to claim it with the right way and audit-proof. Why does it matter now? With so many people running businesses from home like YouTuber, Etsy seller, consultants, coaches, your home is no longer just where you live, it's where you earn. And if your home helps you make money, the tax code lets you deduct a portion of it. The big beautiful tax bill didn't change this deduction, but it made the broader tax environment more predictable, so you can finally plan ahead. What the law say and what it didn't change. The home office deduction still falls under the Internal Revenue Code section 280A, and you have two ways to calculate it. First is the simplified method and then the actual method. So let's talk about the first method, which is the simplified method. So the simplified method is exactly what it sounds like. So you multiply the space you use exclusively for business by $5 per square foot up to $300 total. So it's up to 300 square foot total. So meaning the maximum deduction is $1,500 per year. No depreciation, no receipts, no spreadsheet, just one clean calculation. So let me give you an example. So Emily, one of my clients in Dallas, run a wedding photography business out of her home. Her editing room is about 200 square feet, used entirely for client projects and file storage. She used the simplified method, so 200 square foot times $5 per square foot, she's able to claim $1,000 deduction. So that small change saved her about $250 in taxes. No red flags, no audit worry, just properly documented deduction. When the details really paid off for you. So now, if you live in a high-cost area or own your home, the actual expense method can sometimes save you even more money. So now let's talk about the method number 2, which is the actual method. So with this method, you calculate the business yield percentage of your home, say 15% or 20%, and apply that to the real costs like rent, mortgage, interest, utilities, insurance, property taxes, and even repair. So for instance, Carlo and Jenna, a husband and wife architect team in San Diego, use 400 square foot of their 2,000 square foot home for their farm. So that's 20%. So they apply that percentage to their actual expenses, and their deduction came out to nearly $3,800. So more than double what they would have got under the simplified method, because they kept good records like utility bills, floor plan, and a few photos, and it was fully defensible. So which one should you pick? There is no permanent choice. The IRS actually lets you switch method years to year. So I always tell my clients you want to run both numbers before you file. So sometimes the simple route wins, the other time the detailed ones does. So to qualify, the space must be used regularly and exclusively for your trade or business. So it has to be your principal place of business, not like the nerve center when you manage your operation, invoices, and client work, right? So that's where it should be, like the main place. So it could be a spare bedroom or a dedicated desk in your studio or even part of your garage, as long as you use it only for business. And yes, you can still claim it as if you meet client somewhere else, as long as your home is where the administrative works happen. But usually we want to tell a client if you can dedicate a space like a room, so it's easier to prove, right? So if you only have a small area within your living room, then it's going to be hard to prove that it's exclusively for business, where you have the couch and the TV and other things that are personal, right? So you want to keep that space exclusively. So you want to maybe use the garage space and then only use that for business, or one room or something, even a closet. So you can keep everything, it's easier to prove, and there is no personal stuff or any other personal activity that can be in that space. So now how does the Big Beautiful tax bill fit into this, right? So why it did not touch this section, the 288 directly, it permanently extended the 100% bonus depreciation, and then the 2.5 million of section 179 limit, and 20% QBI deduction for small businesses. So that means your Schedule C or S Corp write-off are now more long-term certainty, and that makes your overall tax planning include home office claims less risky. So let's talk about some more examples so you can see how they work. So let's talk about Tina, one of my clients in Honolulu. So she runs a handmade jewelry shop on Etsy. So for years, she used her second bedroom to photograph product, store inventory, and pack orders, but never claimed it. Now we sat down and reviewed her layout. So the room was about 120 square foot of exclusive business use. So if she used the simplified method, so that $600, right? Or add in 70% of her internet and utility and business, she picked up another $400. So in total, she saved nearly $300 in taxes, all for properly documenting what she was already doing. And that's the beauty of knowing the rules. Some strategy for you. So now let's turn it into a step-by-step plan you can actually follow. So here are 5 smart strategies to make sure your home office deduction is rock solid. First, you want to pick the right method. You can start by comparing both methods, so each year. So if your workspace is small and you don't want to track receipts, the simplified method is perfect. But if you rent or your mortgage is high, or your office take up a large portion of your home, so the actual expense method might give you more bang for your buck. Think of it like choosing between standard mileage and actual car expenses. So whichever saves you more, you want to use that. Second, you want to document your space. So documentation is always your best friend, especially with the IRS. You want to take clear photo of your workplace once a year. You want to just take a picture, look around, make sure there's no other personal things going on, like say living room where there's a couch, a TV, that kid can stay there and watch TV, and a toy laying around. That doesn't sound like exclusively for business, right? So you can also print out a simple floor plan and mark up the office area. So keep these in a folder labeled home office. So if the IRS ever asks you, you can show them exactly what you used and how you measure it. So the proof alone can turn a stressful audit into a 5-minute conversation. Third, you want to track partial years use. So say for example, if you move or remodel mid-year, so don't skip the deduction, just prorate it. So for example, if you move in July, you can claim 6 months worth. Even partial use is valuable. It's all add up over time. Fourth, you want to deduct internet and utilities separately. Here's something many people miss. Even if you use the simplified method, you can still claim business internet and phone expenses separately from the home office part. So one of my clients, Noah, a digital marketing consultant in Seattle, didn't realize it. So we reviewed his bill. 80% of his Wi-Fi and electricity supported his business, and that added almost $900 in extra deductions. So a simple conversation turned into real savings. So you want to stay consistent across all records. So this is where most people slip up. Your business address on your Schedule C, invoices, business bank account, and even your Google business page should all match your home office address if that's where your work happens. So consistently tell the IRS your story and real, so no mixed signal, no confusion. Because anytime that they can point to that same address, it's easier to prove your eligibility, right? Here's some bonus tips for you. You want to go the extra mile. So now let's wrap it up, and then you can make your deduction stronger, good, and your life easier. So if you sell physical product, don't forget storage. Janet, Amazon reseller in Phoenix, have shelving in her garage exclusively for inventory. So we measured it as 150 square foot, and that counted as a home office. Even though it wasn't a desk, it was still a business-only space, and the IRS allows that. Thinking about renter. If you rent a place, are you still qualified? So don't think that this is just for homeowners. If you rent, you can still claim the deduction. Just use your portion of the rent and utilities. In some cases, renters get a higher benefit because they can claim depreciation. Another tip for you is to update your insurance. So if client visit your home, you want to check your renters or homeowner insurance policy. Some companies require you to note business use for coverage to apply. Adding that clause not only protects you, but also proves your space is legitimately used for business. Another thing is to keep proof of the exclusive use. So exclusive use means no personal activity in that area. If office double as your guest room or gym, it won't qualify. So dedicate that space, even if it is a small corner only for business. So take pictures, set boundary, and make it official. If you like a simple Excel worksheet that compares the simple versus the actual method side by side and walk you through every step, you can grab my Home Office Deduction Planner on Pro Deductions on Etsy. And if you want to learn how to maximize all your small business deductions safely, visit accesswhyinstitute.com for our Audit-Proof business deduction training. I would love to know, do you work from home full-time or just 2 days a week? You can comment home base below to tell me how you set up your workspace. We love hearing from a community of entrepreneurs and creators. So to recap, the Big Beautiful Tax Bill didn't change the home office deduction, but it did create more stability for small business taxpayer. So that means you can plan ahead, claim confidently, and stop leaving money on the table. Whether you use the Simplified or the actual expense method, the keys are documentation, consistency, and exclusive use. When you get those right, get all your ducks aligned in a row, the deduction is completely legitimate and worth every penny. Remember, this video is for educational purpose only. Always double check your eligibility before you file. If this helped you, hit the like, subscribe, and share it with another business owner who works from home. And check the link below for tools and training to help you maximize your 2025 deduction with confidence. Thank you for watching. I'm Mia. I'll see you in the next beautiful tax update.